Hey guys, welcome to my channel. I hope you're good. So we are talking let money work for you. So without wasting any further time, let's get to it. Just to note before I continue, these are the topics that I'll be talking about: shares, bonds, crypto, forex, commodities, real estate, derivatives, EFTs, tax-free. I will be doing introduction on this video, right? I can't cover all of them full context at once. So I'll be giving you introduction of each and every one of them. So this is more of how to invest in it and how they work, right? So, and then later on, I'll be going deeper into those topics. So it is very important to listen to all of the slides so that when I come back later and then post something about shares, bonds, when I post about each and every one of them, you also have introductions like you've got the foundation, you're not confused. So let me not waste your time and then let's dive in. And let's talk about shares. How do shares work? So normally a company will allocate a specific share to the public, right? So and then once you buy that specific share, they'll probably have a share price. Maybe let's say one share is like what, $7 or $10, right? So the more that company makes profit, the more the share price goes up. Meaning you got to buy those shares a bit early. And then now, once you buy a share, now it makes you a shareholder. But remember, that doesn't mean that when you're a shareholder, which means you are a shareholder of the overall company. So normal company will probably give a certain portion to the public, right? Maybe let's say a certain number of shares. They're not gonna give you give the public the entire company shares. Imagine a public having entire company share, and then all of you decide that okay, we're going to sell our shares from the company. Then what happens to the company? It collapses. So they're not gonna give you everything. They'll probably give I don't know, public. It depends on what they want to give to the public. Whether it's 10% of the company or whether it's 20%, and then sell that in terms of shares. So now it becomes like 20% of the company is in your hands as one of the shareholders. So that's how shares work. Let's talk about bonds. So in terms of bond, we're talking about loans. So instead of you getting a loan from the bank or whoever, you give them a loan. That's what bond is. You issue a bond or you give loans to government, you give loans to corporation. You can also give a loan to the bank. So they will issue a bond, and then you buy into that bond. Then you're loaning your money to that organization or corporation or a bank. And then from there, how it works is there's an agreement, right? Let's say you have a loan or probably a bond for like 5 years. You're like, okay, here's my 100k. You can keep it for 5 years, and then what happens? Like you guys agree on a certain interest rate, and then from there they'll pay you your interest annual or probably every 6 months, depending on the agreement. And then from there, for that term, right, let's say it's 5 years, so in that 5 years, let's say every 6 months you're getting interest of your money. And then after that 5 years, once that period elapses, you get your money back, your 100k back. Yeah, that's how bonds works. Okay, let's talk crypto. I think you heard about one of the cryptocurrencies called Bitcoin. So this is digital currency other than like your normal physical currency. So this one is digital currency and it's not linked with anything, right? Meaning if we look at money is linked to gold. So in the olden days they used to use gold to buy stuff. So now they've realized that now obviously gold is getting heavier, right? So now we need to link gold with something, which is now called money. So how much money you have is linked with gold. But now this one is digital currency. It's not linked with anything. So that's crypto. Then we talk Forex. We talk foreign exchange, right? We're talking about exchange of currencies, right? So when you buy another one, you sell another one. So how it works is you got to look at the weaker currency and you got to look at a stronger currency. So if you believe, for example, let's say USA, which is US dollar, and then let's say England, which uses pounds. If you think pounds is gonna be stronger than US dollar, which means like England's economy is gonna be stronger than USA, what happens? You buy pounds and you sell USD or US dollar, they call it. So that's how Forex works. When we talk about commodities, commodities in simple terms, you can just say it's all the physical things that makes the world go around, right? You've got livestock, you've got gold, you've got oil, you've got petrol, you've got farms, you've got crops. Those are all the things that makes, I'll say that makes the world go around, that we need. So these are all commodities. So yeah, that's all physical things. It's not money, it's all physical things that makes the world go around. You're talking about, obviously, just like I said, crops, farming, and all the stuff. So yeah, here we're talking about REITs. We're talking about real estate investment trusts. I assume you probably heard somebody talking about investing in property. This is what we're talking about, but this one is a little bit different. You don't need to buy it, you just invest in it, and then when that company that you invested in gets rent, you get paid. So we're talking about not only just flats, we're talking about the malls as well. We're talking about big stuff like big parks. Yeah, you just invest in them, so you don't really have to own anything. You don't have to go there and buy that shoe thing. You just invest in it. Yeah. Okay, we're talking about derivatives. This is a contract, right? So it gives you an advantage of buying certain thing at a locked price. And I'm talking a locked price. For example, let's say you're gonna buy oil. Let's say the current price of oil is $70, and then you say, okay, Sharp, I've got in 3 months time I'm gonna buy this oil at $70. So if oil goes up within that period, you can still buy the $70. But here's the catch, right? If the price of oil goes down, unfortunately, you have to buy it with $70. So this is more of if you're anticipating that oil price is gonna go up in the next 3 months, then that's where you buy it. So yeah, that's how it works. That's how the contract works, and you are obliged to buy it since it's a contract. So yeah, we're talking EFT. They call it exchange traded funds. You probably heard about it. Let's say you want to have a piece of commodity. You want to invest in Forex, you want crypto as well, you want bonds, you want shares at the same time, right? So it might be a little bit expensive to buy them individually, but now EFT made it easy for you to buy them as a collection. So let's say you have an EFT where there's a bond, there's Forex in it, there's crypto, there's commodity in it, and they call it, I don't know, bonds Forex EFT. So you can buy all of them. It's almost like you're diversifying your investment, but it's like one thing. So it has got like a couple of things inside it. So you've got bonds inside it, you've got all the couple of investments, you've got stocks in it, you've got assets in it, you've got bonds, you've got commodities, you've got securities. You get what I'm saying? So this is a collection in one. That's how I'll explain EFT. Just a disclaimer here, the username I've used the R's, which is South African rands, is because of this information applies to South Africa. And then other countries, they probably have different methods of tax-free. So in RSA or in South Africa, you are limited to investing 3,000 per month, right? And then you're also limited, obviously, you're limited to investing 36,000 per year, right? And then another limitation is 500,000 in 14 years, meaning you can invest 3,000 rand per month for 14 years. So, but now when it comes to 14 years and 500,000, you are no longer allowed to invest more. But you can allow that 500,000 to grow interest, because every year it gets interest. So in 14 years, you're most likely to be at 500,000, and then after that, they don't allow you to invest more 3,000s, right? You just allow it to grow using its interest rate. Whether probably interest rates probably the times like 4% per year or 3% per year or 10% per year. You can allow it to grow, but unfortunately, you can't add more money. If you add more money, then that's where now you're gonna trigger, you'll be eligible to pay tax on that extra money. Yep. Since you've made it this far, thank you for taking your time in watching this video. I will be posting other videos explaining each and every topic that I was talking about, getting more into elaboration, how things are done, where to do it. So yeah, thank you for taking your time, and if you're still new, please don't forget to subscribe, like as well. Don't forget to put comments below if you feel like I've missed something or you want me to talk about something. Thank you guys.